Trading is risky. Have a read of the disclaimer and enjoy the video. So the weeks have been flying insanely fast. And I'm seeing, like, especially this year, we haven't increased overall the amount of members that are flooding into the mentorship, but we have increased the amount of members that are getting funded week after week after week, right? So that is really, really crazy to see and really cool, because it means that a lot of the people that have been here for a while, that have been studying, that have been learning, or that are just on this kind of path here, learning the concepts that we're using, how we're using the concepts, seeing it happen over and over and over again, are having major clicks in what they're doing and how they're doing it and the trade plans they're following. And then they're going out and finding the ability to either A, get funded with firms or whatever it might be out there, or doing it live for themselves. Which actually brings me to one thing I did want to note today, which was just something that happened this last week. It was one of our members who got funded, but he's actually just on his own live account. I just want to showcase this really quick, because he shared this, and I know this member has been here for a while. So yeah, so right here, I just want to bring this to your attention very quick as we start today's webinar. This has been so cool. So Black 2000 has been, or 20,000, 200,000, has been part of the team here for quite a while. He's been on and off. He's recently come back. So if you see like a join date, yeah, like April 8th, that join date is incorrect because he's on and off. But he's currently, and this is actually his performance on his own live account, which is absolutely immense. Okay, like this kind of growth is crazy. I don't try to show growths like these or talk about growths like these because it paints an improper picture for someone that might be completely new, or someone that might just be building out a system that's not having a result in line with what a result of someone else might look like, which is why I've never been result oriented outside of the fact that, are you profitable or are you not profitable, right? Because at the end of the day, if you have profitability, even if you can churn 1 RR a month consistently, is that a system that you could basically go full-time trading with and, let's say, quit doing other things? That's something that should be very easy for a lot of you to say yes to. But if you're brand new, that understanding might not be there yet, right? Because I've mentored, I've worked with, and I've seen a ton of people come and go that have been under the umbrella of, if I'm not producing results at the level of my mentor or at the level of someone that I've seen in the trade talk, in the community, or whatever it might be, then I'm not at the actual point where being a trader makes feasible sense, right? All it means is that I have to get better. I have to find a better win rate. I have to find a better RR. I have to find a better way to make more money. Which is complete nonsense. A lot of you should know that's complete nonsense, right? Because at the end of it, if you can just make 1, 3, 5, 10, 15 RR a month, whatever it might be, whatever that number might be, then you have a scalable, compoundable, unpenetrable, basically, system that can make you close to an infinite amount of money within the permissible scales of the trading space. Which is a really, really cool thing. So I just want to bring this to your attention for the start of this week and just say congratulations to this member. This is an insane result. Doing 250% in about 3-4 months, 5 months is, yeah, February to December, January, February, March, May, June, August. Yeah, so about 8 months, 12 months. This is phenomenal. This is beautiful, right? And this is completely in line with the things that I've seen that are expected, that come from building out your own system and following an actual process. So congratulations, dude. This is just really cool, okay? So I just wanted to bring that up because I've just seen a lot of people doing very well the last few weeks, and this is a testament to that. Now, this last week, for myself personally, was actually a very good week as well. From the very start of it and then through, actually, if we looked at all these trades, it looks like I barely caught anything. But just from the stuff I caught, just on this thing right here, I think I have around 4 RR gained, which is great. I'm really happy with that. And I'm gonna do the webinar a little bit different today. I'm gonna try to start with some of the kind of breakdowns of the trades of the last week. Just go right into that. Do kind of a top-down I'll walk you guys through my thought process, what I was doing, what I was looking at, the screener, of course, and how I'm using it. And then work down into what we might be watching for the upcoming week, because that usually goes hand in hand with the screener. Since oftentimes, I mean, with the things I traded before, because oftentimes the things that I'm trading before are the things I'm trading now, right? So to give you guys an example of that, when you look at some of these things right here on the right-hand side of my screen, blue primarily just means that I've been watching it this last week or 2 weeks ago. When you look at this, do you see names here that have been here for at least a month? I'll start with that. For people that have been here a while. So anyone that's brand new, first of all, welcome, but you don't have to answer that, right? But yeah, you guys are completely correct, right? Most of the names, with the exception of just a short few, most of the names you see here are names that have been here for a month or more, up to months, up to like 6 months, right? And this is because, as I say all the time, money, in terms of how it flows into markets, is very cyclical, right? What I mean by that is, when money flows into a market and the market begins to showcase some form of bullishness, oftentimes, and let's say it's extremely green, so like, let's say screener wise, right, it's showing that it's extremely green and the market wants to be bullish or whatever it is. How long could it take for that bullishness to disprove itself? Could it be that next week that it disproves itself and just falls off and you never look at it again? Yeah, it could be, right? And there are markets that I have, and I, in the mentorship as well, that I've said, guys, I really want to see this go. This looks really, really good. I want to see the bullishness deliver. It looks perfect. There's nothing wrong with this. And then all of a sudden the next week, it just does this, starts chopping, and it's just like down here over months, right? So that's something that will no longer ever be brought up, nor is on my watch list whatsoever for those coming months. And at the same time, have I taken any losses or sustained any new losses in taking that actually looking at that bullishness or that bias, right? The answer is no. So I looked at something, I had a bias and a preposition on it, and then I took absolutely no trades when it became wrong, and it no longer became a part of my watch list whatsoever. And then you have another example. Let's say something like gold or silver. So again, going back to the screener, which I'm still working on and making even better. But if we go to gold, which is extremely bullish and has been bullish, or silver or ZAG, which has also been very bullish, right? When you see this, and then not only is the bullishness there, but then into a coming week, it begins to sustain that move. What is likely to happen to a trend that is beginning to sustain and showcase its own trend? It often tends to continue, and money continues to sit within it. It continues to trend on its given time frames, on its given moves, even through reaccumulations and even through periods of chop. It continues to then trend over months, over years, over 5 years, over 10 years, which is why over and over and over again, it might seem very crazy, but it's not. When you guys show up to any of these webinars and you see me looking at something and it's on my list and then it stays on my list, and as it stays on my list, the market keeps going in the direction of the list that it stays on, to someone that's kind of new or intermediate, right? The thing they're seeing is, oh my God, this is better than a signal. This guy knows what stuff is moving, right? This guy told me to watch Bitcoin, like fucking 8 months ago now, right? He told me to watch Bitcoin here, and he told me to keep watching it here, and now the market is here, right? So clearly, like, something's going on here. This is something special. But the reality is, all I'm doing is I'm looking for similarities in what creates a trend. And then I'm pinpointing those moments. And then, if the market doesn't deliver, I, at worst, take one loss, but usually take nothing at all, and the market goes to shit. Or, in the best case scenario, I'm correct. The market starts to go in the direction that we've decided or discussed, right? In this case, Bitcoin or gold or silver or the dollar yen or oil or coffee or Ethereum or or GBTC or Carvana, whatever the fuck the thing is, right? And then it keeps going for months on end. And then it doesn't go off my list. So all of a sudden, I look like I'm a genius, because the things that I have drawn and watch list on the right hand side of my screen are the things that are continuing to deliver beautifully, right? But the things that aren't delivering beautifully, were never even traded to start with, or I took a loss and walked away from it. So that is what you're ultimately doing, and that is why I'm consistently able to catch really cool trends. And this is why, if you guys have been on my public YouTube, where you have people that are kind of coming from all backgrounds, not even from the MentFX background, they look at it and they say, there's no way, right? This is hindsight. You haven't been trading this for 6 months, right? You haven't predicted any moves. It's like, okay, well, congratulations. You're very smart. The reality is, this is what trends work like. If you get attached to just looking for moments like these on markets, and then you follow that market is going to either A, prove itself and then continue proving itself for long periods of time, or disprove itself and you don't have to touch it. Which leads us back to the concept of, I would love to hear the idea behind people that have been here a while. What is this concept right here? This is what I call the concept of free money space, or free money zone, basically taken to the next level. So the free money zone, for people that are brand new, is the understanding that if you can create a system. So what this means is that if you can create a system in your arsenal that consistently allows you to be wrong and be wrong quickly, right? So notice something interesting that I'm starting with. I'm not telling you to be correct. I'm asking you to create a system that tells you that you're wrong. Okay, this is completely against all of trading, guys, okay? If you work on completing a system or creating a system that tells you very quickly that you're wrong and you're wrong and you're wrong, well, that means that when you're right and you're right big, that's where the reward is going to be. Because if you're wrong small and you're wrong over and over and over again, nothing happens, right? Let's look at this Bitcoin move, guys, right here, okay? If, for any reason, this failed down, okay, instead of making this move that it did, imagine it did this instead. Would I, at this point, be watching it whatsoever if it started doing this or this? Right? It would be off the list. And then as Bitcoin makes its plummet to $3,000 and the world is blowing their minds, I had a simple invalidation point that allowed for me to say the context is no longer there. On the other side of the spectrum, in the case that the screener and the delivery of price begins to line up, and the MAs begin to line up, and everything lines up, and it begins to go in my direction, the upside is infinitely more continuous than any side of the downside, which means that if I throw a dart, remember, here's a dart, ready? Here it is. That's a dart. Let's throw infinite darts. Wow, so many darts. If I now throw a dart, even without a good system, into this, what's gonna happen? Dart, 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 dart. What's gonna happen if I throw darts at a market, even without a good system that has started to prove itself? Well, the reality is I'm likely going to get into something that makes a delivery that is greater than more than 1-to-1 R and higher, which means that I'm already on the precipice of a more powerful, trending, and profitable system, right? So if I just throw darts at a market that has proven itself in terms of the free money space, or on the upside, then I guarantee, even without a good system, that I can pull at least a little bit of RR out of that market, okay? So like just to show another example of this, what is one market outside of Bitcoin that we've looked at over the last 3 months due to the nature of that actual move? So UJ is one, sure. Gold, oil, exactly. Okay, a lot of people are saying gold, so we'll go to gold. Okay, so similarly, just like gold, if you guys remember, around here is where we started to look for that bullishness on gold, around here. Again, if I play the same game of let's throw a dart at the market, given the fact that we had an overall bullishness showcased by the actual screener or by your own analysis, because remember, the screener is not necessary, but the screener is the best thing I've ever created and the only thing I use now to basically look at everything, okay? So this thing has been showing bullishness, right? Without a good system, no ICIs, no MBs, no lower time frame, just a dart. Here's my dart, okay? We're gonna throw this dart, I'm gonna copy paste it at the market. Okay, here I go. I'm gonna throw a dart here where price is now. I'm gonna throw a dart here. If it ever crosses it, I'll throw a dart here, I'll throw a dart here, I'll throw a dart here, and I'll throw a dart here. Okay, and I'll make all of them, just for the sake of explanation, 1 to 3. Okay, so I've made my system a little bit better. 1 to 3, 1 to 3, 1 to 3, 1 to 3. So I'm throwing darts randomly, just given the fact that the context is there. And I'm looking at -1, 2, 3, 4, 5, 6. So I'm looking at -6 that I'm willing to take if price goes higher, total. Okay, great. I'm ready for my system, okay? Okay, I get tapped in. I get tapped into this one. And it looks like I get tapped into this one, right here. So now you're seeing why I have systems in place too, but, so we now have one that's winning, these 2 lost. So I'll actually just record the losses to make it easier, -2, okay? Loss, loss. Okay, great. So it taps me into this one now. Oh, sorry. It tapped me into that one and this one. And this one. Oh, okay. So, and this one's now tapped as well. Okay, so +3, +3, and this one's just about to deliver +3, so it's at break even. So right now it's +6, so +4. So at the moment we're up RR overall, okay, just by looking at a market that has proven itself to be clear and then entered through the trend without anything else. No MAs, no overextension, no nothing, which means that sometimes am I going to be punished for throwing a dart, especially setting up multiple setups like this? Yes, I'll be punished, because then if a wick happens, it'll suck. That's fine. But at the same time, imagine you throw a dart, but you don't enter a new one until you lose. So for instance, right, if I threw a dart here, and then, oh, or sorry, I throw a dart, here, it goes, it takes me out. Now, after it takes me out, I wait to throw a dart until it does what? Starts coming up again. So then I throw another dart here. Now I wait, it takes me out, so I wait till it starts coming up again, and I throw another dart here. Then I get a win, so I wait, and I throw another dart, you know, whatever, here or higher, etc. The point is, right, if I just take a throwing the dart in a good market, and I just improve that a little bit, there's a potential edge there. So then the question becomes, for those of you that are especially new, and this should be something you can answer even if you're new, right? If you can throw a dart and theoretically make a little bit of EV just by being on the correct side of trend and then just trading it like that, do you think that refining your system to maybe using proper understanding of stage 1, stage 2, proper understanding of using MAs, proper understanding of using multi-time frame confluence to enter a trade, do you think adding those things is going to take away from your edge, or potentially add, especially add in immeasurable ways to your edge? And then you start to see why I have the rules that I have. You start to see why, as a mentor, as a trader, I've made a move away from a lot of the things that I personally used to do. Like, I used to trade support resistance. You guys know this. I made a move away from trading the change of characters of the world. I made a move away from trading the straight up Wyckoff in a zone and back and forth of the trading world. Now, was that stuff profitable to me? Is it profitable? It was. At every single point, I've made money in my trading career by following the process of data collection, which is a process that is taught to you here. So I've always made money through trading by following the process of data collection, because I proved to myself what I can do. But I've increased immeasurably the amount I can make and the markets I can trade, and when I can trade them, that has completely shifted everything, okay? Because remember, this is something that I kind of bring up, but I want to touch on today as a main talking point, because it goes hand in hand with everything we just discussed. And that is, let's say you don't have a market that is, or let's say you do have a market that's trending, like gold here. In the scenario that I'm showing up every single fucking day, no matter what, and I'm taking any entry I can because I have a pattern that I want to follow, do you think that any of those entries taken inside of, let's say, this block here would lead to you being inside of this move? Yeah, I mean, so the answer is yes, because theoretically, based on your system, right, you could simply just enter and have a stop loss down here, right? So of course, yes. But Let's say you're entering a lower time frame setup where every setup you take is likely going to be where you protect a low like this. In a scenario like this, do you think any trade entered within this block would allow you to be inside of this move? So this is where it gets a little bit more interesting. And this is kind of very important to the point I want to make. So like a lot of you are saying, I believe that the answer would be no, right? So this is, and the reason I want to bring this up is because, listen, if you're entering kind of in this block, this area, you're going to be flushed out or chopped out before the move comes, which leads me to the point that I want to make, which is, do you notice how trading every single day, as in within this area and everything, does not actually guarantee or create the likelihood that you'll be in the actual big move? So if that's the case, does it make more sense to trade anything, any day, to try to make money? Or does it make more sense to wait for a specific context to begin delivering so that you're within the move that is going to create the large move, right? So then I ask you the next question. Would you guys be willing to enter in here? So here's your setup, okay? This is your setup. This guy is your setup, guys, okay? Would you rather be waiting to enter this here or here? Right, exactly. So, and I do this because the thing you see every single day is a fear of missing the trade, of course, of missing the move, of missing the big move, or the fear of not being in the move when you're learning. And this is even more larger, this fear, when you're starting out. Because when you're starting out and you're not in moves and you're not in trades and you're not taking the actual trades of the things that you're learning to do, right? Hey guys, welcome to MenthFX. Here's institutional structure. All you want to do is you simply want to enter here on the supposition of the next institutional structure, just like that. Oh, okay, Ment. Euro USD, here I go. Okay, it's showing me bearishness. I hope this works for me, right? I hope this works. I want to do it. There is a very large need when you're brand new to execute the concept that you're learning, or to execute any analysis or concepts that you're learning, right? Because you feel like if you're not in a trade, you're not actually doing work, which is complete nonsense. It's actually the opposite. You're doing more work by asking yourself, where do I stay out of price, than you are taking trades. The easiest thing for me to do, just so you guys know, the easiest thing for me to do is to take a trade. The trade is the easiest thing because I already have my psychology worked out. I'll take the loss, the break even, or the win. That's it. There's nothing more to do. I'll take the trade. The hard part is not taking the trade. The hard part is looking through 1,000 different markets and saying 900 of them don't meet my criteria for these reasons, so I will not touch them. 100 meet my criteria. 30 of those 100 meet the criteria right now. 10 of those 30 are clear, and 2 of them are worth taking. That's the hard part. The execution of the trade is the easiest. Looking at the actual context of a market, deciding if this is something that you're willing to put risk on, if this is something that's moving clearly or not clearly, that's the hard part, right? Chris says, any psychology recommendation there, Anton? I just gave you my psychology recommendation, right? My biggest psychology recommendation is recognize the hard part is doing the analysis, not the execution. And the reason that my psychology is great with my execution is because there's only 3 things that can happen within my execution. What are they? A loss, a break even, or a win. That's it. So there's nothing for me to do other than expect those 3 things to happen, because when I've looked at these 3 things happening within a pool of 10,000 trades, what happens? In 10,000 trades, when these 3 things occur in that pool, what happens over 10,000 trades? Does anybody know? Can anyone guess what my data has proven to me? If any of these 3 things happen within any trade within 10,000 trades, what happens 10,000 trades later? I make money. That's it. So I know that as long as my psychology of taking those 3 things, break even, loss, or win, is going to always result in an overall profit. This is actually my current results right now. Over the last few weeks, I've been using the new journal that we have made available, right? Look at the periods, my actual periods of drawdown and break even. It's hard to tell because it just keeps going up, okay? It's hard to tell. Yes, 75 RR, yes. At 0.5% risk, just so you understand, 0.5% risk, okay? Does this curve mostly go up, or does it mostly go sideways or down? Mostly. Correct. No, Age, you're wrong. Read what the price is doing. Most of the time, over half of the period spent, or more, is actually going sideways or down. It looks like it's going up. Why? Because the occasional trades that make me money, right? And I know that given that I take break-evens, take losses, and take wins on any trade that I take over enough trades, will do what? It's in front of you, okay? It will make me money. No matter what. Dan says, same, most of the time, just sideways. Yep. Look at Dan's, so like this is why I've always advised you guys to do this, because you need to see it for yourself, right? Really pay attention to, really pay attention to how long is spent in break even or drawdown, right? Break even drawdown, break even drawdown, pretty much break even drawdown, break even drawdown, break even drawdown, break even drawdown, okay? And then moving up, moving up, moving up, moving up, moving up. I hope you guys see that the moving up spends so little time of the actual trading journey or the process of taking trades than you do in actual break even and drawdown, right? I mean, and you can make a little bit of excuses like this is moving up, that's fine. But again, as I draw this out, nothing about this should be telling you, oh, hold on a second. I can just make money every day if I just execute. Oh, let me just make money. Because that's not how it works. Money is made through the process, not through the execution. Oh, that's a good quote. I'm gonna say that again. Money is not made through the execution of any independent trade. Money is just made through following the process. That's really it, okay? The money was made here, okay? Not in any one of these little moments. These little moments have no effect on the actual time. The only effect they have is that you followed the 3-rule principle of, I know the psychology associated with the next trade. That's it, right? The rest is just, the rest is useless. Yeah, same thing, right? It looks like it's straight up, but if you really pay attention to when this curve is truly moving higher, 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 like if you try to go sideways, like if you try to pinpoint all the times it's gone sideways, all the times it's gone sideways, all the time 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 it's gone sideways, like this is all like sideways action, right? And then you find the mini moments where it actually moves higher, you start to see the same thing. This is just more data, so it looks like it's straight up. But this data here, I'm guessing, is made of over probably like what? Is this like 1,000 trades? This looks like 1,000 trades. No way, I got it right? Right, this looks like 1,000 trades. So of course now it looks like, oh, every trade is a win. But guess what? If I gave this to a beginner today, he's gonna say, oh my God, give me this system, because it just only goes up. But he's not seeing that these first 100 trades spent over 50 trades at break even, right? Like, people just forego the fact that most of trading is sitting on your fucking ass, doing close to nothing, executing the same thing on repeat with the 3 little reminders of your taking break-evens, losses, and wins, eventually, doing it over and over again, and then compounding it into a high percentage gain that everyone looks at and goes, oh my God, how did he do that? That's impossible. That's how it happens though, right? That's literally how it happens. What's up, Black? I just spoke about you, bro. congratulations on your very, very impressive like last few months / year of trading. And congratulations for being back on the team. I'm really happy to have you here, man. It's really cool to have you back. King said, expect soybeans come up last week. Oh, maybe. The nice thing about that is that you can scrap it and focus on something that makes more sense. Exactly. And yeah, exactly, dude. So the beauty of like learning to follow a trend is that you then know how to look at something and say, bye, to the next thing. Or the beauty of following a trend is that when you're proven by the market to be wrong, back to our idea of the free money zone, when you're proven to be wrong, you just simply move to any other market that has remained within the same context, but is moving clearly. And that's it. You've done the work, right? Even though it sounds easy, it's a little bit harder than the way I make it sound, of course. But for the most part, it's really as simple as understanding that those are the things you're doing, right? And again, when you find moments or you have a system where you are going to be wrong and you're going to be wrong quick and then you don't have to look at it at all, and then when you're right, you're going to be right huge. And then within that, you have your actual entries based on the timeframes you trade. Do you think, again, as I kind of look at this, do you think there's any setup here for anyone that trades a double MB, a CS, a ICI, just an MB buy stop, a FMB, a reaccumulation FMB like King? Do you think that's available in here for you to make more money than any of us could fucking think of what to do with? Right? And if the answer is yeah, then you understand that, right? And then again, if you want to scale, don't forget, the same things exist on any time frames you're on. If you want to be a daily based trader, right? Oh, do you guys remember this? From like last week? Look at this. It's beautiful. If you want to be like a daily based trader, you could do the same thing on the monthly, right? When this began to be accumulation, you again have the same thing. It either is wrong and it's wrong quickly, and then you don't know, and then you sit on the sidelines because it's now sideways or moving down, or you're starting to be right and you're going to be right in such a way that the lower time frame entries are going to always present you opportunity. So even if you throw a dart at any point on this market, anywhere, you're going to make money. And then if you step down to your time frame of entry, if I ask you the same thing, does this look like the 30 minute of the price I just looked at on the other asset? Or does it look different and completely something new and something extraordinary? This looks like that same 30 minute. There's nothing different, right? You have endless, the same entries, the same kind of reaccumulations that go beyond the MAs, the ones that surf the MAs higher, that keep going higher, the ones that set up MBs within MBs, whatever it might be. And then you get moves, and those moves deliver, right? Yeah, and like Apple had setups here, and now it's again reaccumulating, but if it starts coming up again, it becomes accumulation, there's gonna be setups here. Because the monthly is still doing what? It's still playing out its initial invalidation, and it's still an accumulation. So like, again, you have the same thing happening right now. I hope you see this. Like, this is not hindsight, because here's the next thing. Ready? Let me just make this really, really clear. Because if it falls down here, you're likely waiting for new context. Until then, though, does everyone understand how this is not like some hindsight tool? At any given point, you're going to have, with a good context, a point where you're going to stop watching the price for a little bit or for a long term based on the thing price does, right? So if price does this, but then it does this, is this going to be a market you're going to be stopping to watch due to invalidation for a long time or for a short time? Yeah, for a short time in relation to the time frame. Long in terms of it's going to be months, but short as in you're going to be looking to re-enter here, right? But then if it does this, and then does this for the next 15 years, do you care? Are you going to touch something? Are you going to do anything? No, there's nothing for you to touch. And then on the opposite side, like I just spoke about, if it starts doing this, what does that present for you? Well, it's going to repeat what? It's going to repeat this. Where? Right, whoops, right here. This is how I anticipate moves. This is how I predict how I'm going to enter. Because I know the setups that will happen in a markup. And if those setups happen at any point in this markup, will I make money? Yeah, that's it, right? And those are the rules I'm going to follow. Yeah, but right now there's nothing on Apple, right? Right now it's just in distribution. This is the beauty of following like simple rules. It's just in distribution now. If we were watching it if we were trading it daily, right? So there's nothing to do. We'd need this thing to probably play. So right now we're actually in the red. If you think about it, this is all part of the invalidation point of like what we shouldn't be touching, right? So I would just be simply waiting. Maybe it breaks down and then I do nothing, or it breaks up and then it becomes accumulation. And then, right? This setup, literally, this setup will happen here. I know how the market's gonna move if it's gonna give me a setup, right? That's all I have to do. And if it doesn't, I don't watch it. And if it does, I watch it. And if it doesn't give me the setup, but it still goes, I look at the move and I say, oh, I knew it was bullish. It is what it is. Goodbye. See you next time. Let's look at the next pair, right? Because there's no attachment now to any given market, because I'm not trading markets. I'm trading my setups within good contexts. Is AAPL, whatever that is, don't even know. I mean, I know what that is, but I don't know what it is. Is it in a good context? No. Can I trade it? No. Done. That's as much as I need to do. Do I care that Bloomberg boomers are telling me that the market on Apple is ready for all-time new highs? I don't. I have nothing to do. It's useless, right? I'm going to scroll up a little bit and read through some stuff. So much for starting with a breakdown of a trade, though. That did not happen, did it? Mantifex is a market maker. Changed my mind. I am not a market maker, bro. I am the furthest thing from a market maker. Always remember, if you don't know what you're looking for, how are you going to see when it shows up? Yeah, how are you going to see it when it shows up? Exactly. That's why we do the data collection. That's why we do proper back testing or proper study of prior data. That's why we look at moments like these to determine what signified a good trading setup. What signified good trading setups? What signified good trading setups? When I'm drawing like, well, by the way, just so you guys know, when I'm circling like this right now, I'm literally showing you moments that I would look to enter. What's signifying a good moment to enter for me? What's signifying a good moment to enter for me? What's signifying a good moment to enter for me? What's signifying a good moment to enter for me? Okay? What's signifying a good moment to enter for me? A good moment to enter for me, right? I know what these moments look like now because I've collected infinite amounts of photos and proof and back testing and teaching the testing and showing the testing and seeing people use the testing and make money off the testing and teaching it themselves. Oh my God. So I know what I'm looking for always, which means that if it sets up and I know where I'm looking for it to happen, which is why you saw me draw something like this, and that happens here, I will be in it. That's it. I know exactly what I'm looking for, not because I am live trading the markets, but because I've done this study on over 50 fucking thousand individual assets throughout the years. So I have nothing but to expect the thing that I've seen happen over and over and over again. There's nothing better that I can do, right? My life is so boring that I know what a market is gonna do if I'm gonna trade it. How boring is that, right? None of the trading I do is, ooh, I'm feeling kind of frisky. What's this one gonna do, right? It's, oh, this one's not doing what I want. I'm out. Oh, this one's doing exactly what I've seen 20 million other times. All right, I'll trade it. That's it. There's no other thought process that goes into what I do anymore, right? So on one hand, you should see how boring your trading should become. If a lot of you are showing up to the markets every week going, oh my God, is oil gonna go up, down? Am I gonna make money on the up or the down? Oh shit, I don't know. then you know that you're still in the basket of you haven't refined a system or understood a system to the point where there's almost no hype around it. You know, the only hype I feel is when I see the market keep going because the things that I teach are continuing to work in beautiful, beautiful ways, and then trends start and people love that it does that, and I go, it's amazing, guys. This is what trends look like, right? But everything else is just, I've seen this before, deja vu, deja vu, deja vu. I've lived through this 5 million other times. I've seen people get funded using this exact same move 5 million other times. I've seen traders that have done interviews that have lived through the last 100 years make millions up to hundreds of millions entering trades like this hundreds of times. How much more boring can it get, right? I'm a father now. I can't say that. What did I say? What did I say? I forgot what I said. The power of trend-based systems. Exactly. Yes. Yes. Joe says, Anton, would you mind touching more on stage 1 and stage 2? I recently started focusing on them heavily, and I'm second-guessing myself when labeling them. Because there's nothing to label. That is why you're probably having trouble labeling it, right? Stage 1 and stage 2 is just an understanding of how is basically the staircase delivery of price going, and at what point are you? And this will come from a lot of testing, right? So right now on Apple on the daily, I know I'm in a stage 1. The stage 1's probably like this. If it shapes up, the stage 1 might be here, and then the stage 2 might happen inside the stage 1. That'll start a higher time from stage 2, sorry. Right, so this would be the stage 2. There's no one way to look at stage 1, stage 2, or a way to label it. That doesn't really exist. Stage 1 and stage 2s shape their stage 1 and stage 2s around the actual multi-time frame analysis, as well as the institutional structure, as well as the models that are happening at any given point. Because right now, if this model begins to go, let's say if this breaks down again, right? Breaks down, and then breaks up MB1, maybe breaks up again MB2, and then reaccumulates, it'll still be going in this stage 1. But due to this nature of these models that are happening here, this now has become its own stage 1 here that's going to start a very clear stage 2 here. So I'll happily trade it because it's now moving in a very clear way that this move becomes likely, right? So there's no stage 1, stage 2 is simply understanding that prices will do this over and over and over again on the way up. Now, I am working on course material right now. I might even scrap the old remastered thing that exists right now and like remake a model-based approach from kind of scratch. But this is all there is to it. And a lot of the webinars since 100 and onwards have dealt with this understanding of stage 1, stage 2, and shown a lot of examples of it. And so have a lot of the hashtag like ICI extras and context clues within the one-on-one space in the remastered section. So you look there. But this is it for stage 1, stage 2. I think the problem is a lot of people think it's more glamorous than what it actually is, right? It's amazing. It completely shapes my understanding of a market and how it's going to move, but it's entirely based on the fact that, you know, it like 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, longer term 1. Within that long term 1, you start getting some inside 1s, and then you get the 2, and then it goes 1, 2, 1, 2, and then it starts another 1, right? This is like a longer term 1, and it might start a 1, 2 soon. And like we had examples of this happen on gold when I broke down gold a few weeks ago. Back here where I said, you know, we're likely going to enter stage 1 now and then start a stage 2, or we might enter a larger stage 1, kind of like Apple is doing right now, and then start some later on stage 1, stage 2s within it, right? Instead, we just got this move here, and that's what we all traded because that's what it ended up delivering. So again, there's no labeling to them, right? And they change how they look based on the delivery of future price. If price begins to go into clear models, the thing that was a stage 1 before starts becoming a clear stage 2 to be tradable, or where risk is allowed to be taken, or where it makes sense to take on risk because the upside is now very, very clear, right? First live webinar after figuring out why I'm doing it. Sujan, I love to hear that, man. Happy for you. Welcome to the team too. Welcome to your first webinar. Jimmy says, this is why context is king. Entry style is secondary. People like to follow blueprint setups before fully understanding context and wonder why they go wrong. Yeah, people follow pattern-based setups and always stay stuck until they've either spent enough time in the market to notice that, oh, this is where my setup works, or until they learn context, right? So you can do either one. You could spend years learning just through experience, years, right? Oh, this is where my setup works. Or you could do the work now to understand how context holds the key to success and then make your money on your patterns through the context, right? Dan says, without the understanding of context, you maybe could get away with taking trades on a lower and make wins when the context is good. But the minute it goes sideways and it goes into bad context, you're blowing accounts. Yep, 100%. Sujan says, to be honest, Ment taught me taking break-evens is the most beautiful thing that I can do. Oh yeah, dude. The amount of things I've paid for, theoretically, on my break-evens is too much to count, right? Like, I've kind of said this a few times, but what we forget to measure is how important break-evens are, right? Like, when I take 12 break-evens, where each RR of risk, so when I'm risking 1 RR, which is in our case 0.5%, how much is that of, let's say, a $2 million account? Let's say I'm trading $2 million. How much is that? That's 10K, right? $10,000 risk. So if I have a $10,000 risk and I take 12 break-evens, what are break-evens? They're a prevented loss, right? So if I have 12 prevented losses, what is that gain? That is 12 times 10K, which is $120,000 gain. Now, do you guys want to know what I paid for with my break-evens? I paid for trips with my family. I paid for my wedding. I paid for other trips. I paid for, a watch. I paid for anything and everything, right? Because when you take break-evens, you are fundamentally actually making money, right? That's 12 prevented losses. Yes, some of those might have been wins, or one might have been a win. But again, over time, this becomes more losses. So I'm preventing losses, which means I'm preventing a negative 1R, which based on who you are and based on your account size, that prevention can become larger and larger and larger. If you're trading a $7 million account, okay, 1 RR at a 0.5% risk is a prevention of $35,000 of loss. $35,000 times 12 or times 10 is a 350K. So about a little bit more than $250,000 of gained money through a rule, right? So you start to notice that break-evens actually pay for themselves in ways that you can't even imagine. And at the same time, because they keep money in your account, what does that mean for compounding, guys? That means independently, your individual wins are worth more money every single time that you take a break even. Every time you take a break even, your next win becomes worth more money because you're not losing money, which means your risk stays relatively the same. So you're gaining money through a break even on your next win. Break evens are the most underrated. I'm talking about this like it's like a fucking video game, okay? Like, but it is. The break evens are so fucking underrated by almost every trader. Real traders know how good break evens are, but they are so underrated that you don't realize how much they are doing for your system, right? Like, imagine all these break evens here were losses. Imagine all these break evens here were losses. It changes the fabric of what this equity curve is going to look like. Break-evens are not a missed out win. They're a prevented loss, and not only that, but they're an influx into your next win, right? The break-even literally factors into the next win, which is huge. So that means every break-even you take. So if any of you are trading right now and you take, let me tell you guys something. Let's say you take 10 break-evens in a row. The amount of fucking value relative to your next win that you just gained is absurd, right? That next win, even though it might make you 3 RR, has really made you about 13 RR or more. right? That's how you have to start thinking about break evens. They are literally embedding themselves into the next win in such a way that is relatively uncomparable to anything else. They make you so much money, okay? So take your break evens, guys. Be happy with them. They're one of the best things that can happen. Like, look at this. I'm gonna show you guys something cool. Let me go to silver, end of the week. Yeah, like look at this, okay? This is a missed out on win, okay, or whatever. Sure, it's a missed out on win because it went, I took a break even, or I moved to break even, and then I took a break even. A lot of traders, will completely go crazy over this happening. They'll get very upset, you know, and they'll go on their natural cycle of destruction. When I see this break even happen, whether this thing runs to $5 million next, I don't care. Because all I know is this break even has paid for all the other losses that I prevented through my break even rule. And it means that the next win is going to make me more money. Even though this ended up, let's say, theoretically a win. That's not how I think about it. I look at this and I say, okay, it's fine, right? This is beautiful. This is what I expect out of my system. And then I continue and I do it over and over and over again. And when the wins do come, all those break evens that I took before become infinitely more valuable. This is not a 4RR gain with a 50% break even rate, right? With so many break evens, this is more of like a plus 16RR gain, just like that. Even though it's 4RR, which it is, it's 4RR. But again, you have to think about it relative. If all of these are losses and my curve is down here, think about the wins I have to take to get to this high after all those are losses. It's almost, I have to almost take 3 times as many wins just to get back here. But instead, I have to take 4 wins, or it's actually 3 small wins to get here because of my break evens. I ordered a Mentafex hoodie and mug. Hey, yeah, I'm wearing this one right now. You guys can see it. I made the M a little bit bigger because why not? But I will make a smaller one if you guys want the smaller one. But just so you guys know, on every single hoodie that is bought, I make 0.5 cents, okay? So all of these are not here for me making money. This is literally like set by the site. They make all the money, but I don't have to do any work, which is great. So if you guys want hoodies, just know you're doing it for yourself, which is great, you know? We'll take that. Oh, actually, no, I did make the M a little bit smaller, so it's actually clean here. I did make it smaller. I remember this now. So it's smaller than the one you see on me. It'll be a little bit smaller. It'll be like, if this is the size, what the fuck? If this is the size now, it'll be like this small. Wait, like this big. Something like that. Okay? But nonetheless, take your break evens, guys. Can you put some quotes on the back? Maybe in the future. I like to keep it very simple, okay? Very, very simple. All that good stuff. That's a funny one. I like simple. I like the M, nothing else. People don't know what it is. People see it, you know, they don't even ask a question, which is what I like. I usually don't like slogans and stuff. Pez 1703. Yeah, look at this, okay? So the guy that asked about stage 1, stage 2s, right? Like, I drew this out for the team 1703. So March 17th. This is where we were. I expect a stage 1. I don't want to trade this at the end of a stage 2. I'm envisioning this as a stage 2. Can I do this? Yes. And then I just won't trade it. It's okay. I'm okay with that. I'm waiting for a stage 1 to enter now. And then it happens, right? A lot of you probably saw this, and we actually all traded this. Most of us traded this, right? On the daily, right? There it is. This was that stage 1. Then it went into the stage 2, and then it started setting up again. And then we went higher, higher, higher. And guys, we reached our value. I think you guys remember me saying 2,400, 2,300. Or I said 2,300, 2,500, like this, right? Something like that. And now again, to the other guy, this is a stage 2 completion. I would be waiting now for some kind of stage 1. Let it catch the rising 10 EMA or this one. Let it go sideways or sideways for a while. And then what's going to happen? New moves will be built from it. New moves will start going. That's it. Or it'll fail down and we won't touch it. But if it doesn't fail down, I hope you're all starting to see the same thing we just discussed today. You create a unfair advantage in terms of where you get to make money and where you get to stay out if it starts doing not the thing you want. And all of this becomes lower time from opportunity. And that's how I trade. That's how my brain functions. That's how I show up every single week. I don't do anything special or anything new. I just follow the same stupid rule that I've tested enough times to say, there's nothing better that I can do right now. There's no better rule that I can follow right now. So I'm just going to keep on doing this thing until it makes me more money. When you're testing a system, what metrics are you looking at to decide if you can break even earlier or not without making the system worse? Well, the simple question is, by breaking even, have I saved myself more losses, or have I given up a lot more RR and wins? And the answer is almost going to be you've saved a lot more losses, and if that's the answer, then go save those losses, right? Because I prevent so many losses with my system. Yes, I miss out on runners. Here and there, I'll miss out on a lot of runners. But the amount of losses I prevent by simply moving to break even is too much for me to give up, right? That I'm not willing to sacrifice the more losses for the potential gain of a little bit more RR on the trades that would have ran, right? The trades that would have been, right? So like a good example could be, I'm not going to find examples right now. No, never mind. Okay, guys, let's do a quick actually breakdown, because I did want to break down a trade for you guys, because I did promise that. So let's see. Which trade should we break down? So I traded a lot of stuff this week. You guys can kind of see it here. I traded oil, Euro JPY, silver, gold, oil, and coffee. I actually did not show any of my coffee trades, I don't think. I might have shown one or two in the trade talks, but coffee has been like beautiful, right? We spoke about this exact same thing, started waiting for a little bit more sideways, and it began to happen. And then, like if you guys remember, we spoke about this right here. This stage 2 started and I said, I'm too late on this, so you can't really enter it. But if it goes sideways, I'll start looking to enter it again. And it did exactly that. And then I followed this thing up. This week, I had such a beautiful follow-up on this, right? Cocoa was also, yeah, cocoa is the same thing. Same exact thing. It's like coffee. But yeah, you got the sideways. It started, like when you see this, and I do a circle here, or I do a circle here, okay, or I do a circle here. Do any of you see any difference between these circles, okay, and the circles that I drew on Apple when we were looking at Apple a second ago? I hope you're all seeing, like, it's the same move. It's the same fundamental idea of the move. And what am I trying to trade if the move occurs? It's all the same thing. So just that's something to remember, okay? But here's what we'll do. We'll start with coffee today, and then we'll go and look at the others, because again, coffee is not available on the screener yet. We will have coffee available on the screener soon. So we're gonna do something without the screener, and then we'll do one with the screener for a different trade. Okay, so first things first, how can any of you guess how coffee came onto my list? First of all, I just said it's not on the screener, King. Come on now. Yeah, Emka got it and Pez got it. Somebody told me to look at coffee. That's all it took. Someone said, hey, coffee looks good. And I looked at it and I said, hey, it does look good. And then I traded it and I made 10 RR from it. Okay, that's literally all that happened. But nonetheless, you can also do a version of a screener where you're still looking at just, you owe them a commission. I don't know, anyone, anything, bro. Where you're doing a version of a screener where you can look down here, right? So for instance, when I looked at coffee, I looked at the daily first just to see where I'm at. And again, the daily shows me one clear thing. Price has generally been going sideways. So this comes back to stage 1, stage 2, the person that asked me, right? From the left to right, price was clearly in an institutional, institutional bullish push. And on a lower time frame, it's also in an institutional bullish push. It has no reason not to do that. At the same time, though, it has been going sideways for a bit. This could be like a stage 1 of a higher time frame. That's fine. We could be in the beginning of a stage 2 because we know stage 2 start within stage 1s and then continue. So if there's enough alignment for a clear setup, there's no reason I can't follow it. And the daily is too far disconnected from my 5-minute, so I'm okay with looking at what the other timeframes are now telling me. So next part was looking at what is this thing telling me on my context time frame, which at the moment is a 5-hour time frame. When I go to the 5-hour, again, I get a little bit of back and forth. But how is the back and forth occurring? One, institutionally, it's moving relatively bullish. Very bullish, actually, and has the ability to continue. That's all I care about. Secondly, it went from a left to right base story. If you tell yourself the story of what's going on here, prices broke down, broke up, broke down many times, started distribution, redistributed, started going lower, failed to move lower through the redistribution and began to break higher and broke higher with a lot of power, right? So a lot of orders came in for some reason near these lows. That's fine. I don't really care about that. It's just important to note. Price then went into reaccumulation, continued to accumulate, and then orders came in on the opposite side, and it began to be very bearish, but it was bearish sloppily, okay? Bearish MBs, bearish MBs, bearish MBs, and all of a sudden, again, the bullishness retains itself, and then, instead of being a redistribution and moving lower, it breaks higher again, breaking beyond some, let's call them key important highs or institutional highs, and starts making new bullish action. Bullish, 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 bullish. 4 or 5 MBs up with a reaccumulation in the way. So this becomes very bullish, and then it begins to go sideways at a higher rising 200, a little bit sloppy 50, and then a rising 10. These are all part of the story, and then it makes a move away from that. So whatever this was a stage 1 that got accumulated and is now moving higher. And we could be at the end of a stage 2. However, we're now going sideways, which is what I expected, at the rising 10 EMA, which usually, as a lot of you know, right now in terms of how I look at price and think about prices will surf an EMA, the 10, the 50, or the 200, which is generally what I'll look for, right? The 10 goes higher, the 10 goes higher, the 50 goes higher, the 200 goes higher, the 200 goes higher, okay? You guys should see this in front of you before it moves higher. So I know that if this is now surfing a rising 10 and going sideways, so it's caught up to it, we are in the midst of a potential intermediate stage 1 to start a stage 2. So let me look at my validation time frame. As I step down to a 30-minute, what do I see? Institutionally, this price is as bullish as it can possibly get. There is nothing else talking to me about this price than the fact that it's bullish. Does everyone agree with the fact that institutionally, section 1 material, this is moving in a very bullish way? Whether you draw it like this, whether you draw it like this. Does everyone see that no matter how I draw this institutional based structure, higher, lower, zoomed out, zoomed in, it is showcasing a willingness to go long. But not only this, because again, that's not all I use, let's put on our other factors, okay? Is it following the general thing that I look for of 250, 10? It's above a rising 200, above a rising 50, above the 10 that just started rising, and it's above all of them. Phenomenal. This is the move. Right here is when somebody asked me about coffee. This is where they asked me. And I said, listen, if you're not in this move yet, what would I do? What did I tell them I would do? So now think back to our prior webinars. This was last week, I believe, this webinar. So if you want to go back, you can literally go see what I said about this at the time. I said, you are too late to this move, and it's likely going to keep going now, and I wouldn't touch it. However, if price can begin to go sideways, aka start making a new stage 1, because look, stage 1, stage 2. Can it keep going on stage 2? Yes, it can. What do I want to see? A new stage 1 before the stage 2. And look what I drew. I want to see the 50 mellow out and then pick back up. Let's take a look at what happened in the upcoming week. Prices began to flush out. The 50, look at what the 50 does in terms of what I drew. Again, am I a genius, or have I seen 10 million examples of the exact same thing happen so I know what to expect when the next trade wants to present itself? It's not both. I'm not a genius. I'm as dumb as they come. That's it. It's because I have experience. That's all it comes down to, guys. So it mellows out. That's it. It's mellowing out. Okay? And then it starts. Beautiful. Look at this. Like, do you see how the drawing that I drew last week? So if actually, I know some of you are Giga, okay, MentFX members. If one of you can go back to last week, when I drew this before it ever happened, okay, please take a screenshot and send it here, because I want people that are watching this to know that this was drawn, what I drew here for what to happen, happened way before we even saw price do it. And it plays directly into the thing that I discussed with you this week, which is I know what to expect out of price for what it has to do for me to take a trade. And if it doesn't do that, I simply get to walk away, let the move deliver without me, or fail back down. So if one of you have access to the previous webinar and know what the moment I'm talking about, please find it really quick and just link it whenever you find it, okay? Oh, Pez got it already. Beautiful. So here we go. This was last week. Look at where price is. And look what I drew. I even drew what I want to see the 50 MA do before I looked for an entry. Now compare them. Let me start deleting some of this because it's already happened now. And I don't want the line to get in the... Now compare what this 50 MA did and compare what price did in relation to what I drew. Look what I drew. Down, up, takes out the low, gets under the 50, and then starts to go. Down, up, takes out the low, comes under the 50, and then starts moving up. So understand that I had a prerequisite to what I want to see price do before I even touch it. And I know exactly what it has to do. I know what I want the stage 1 to look like before a new stage 2 delivers. Now, did I label a stage 1, stage 2? No. I simply understand that the price, in regards to the way it's moving, in regards to the testing that I've done, has extended itself. And it wants to go sideways, especially if you guys remember, at this point right here, when I did the analysis, look where it was on the 5-hour. Is the 5-hour sailing the 10, the 50, or the 200, or is it way beyond extended from it? It's extended. So I expected some kind of pullback. Usually, I'll look for a 30-minute to sail first, and look at where it is. Look how high it is. And then look at what happened. Does this move here look more primed for a new move higher, or did it look more primed here? Hopefully, as I'm showing you this on a validation time frame, you're all seeing that I didn't do something special. I just saw that price on my validation time frame was way extended, and I want to see it go sideways on the 10 or the 50 before I touch it. And then we go to my time frame of entry, which is not yet to be discussed because we're not there yet. So let's wait for this to go sideways. There we go. Go back to the time frame of entry. Let's go back here. Okay. Beautiful. So as that 30-minute, again, look at where I went down to a lower time frame. Look at where it happened. You should be noticing consistency between every trade that I've broken down the last few weeks. 250, 10. Everything's lining up. Everything is showing bullishness. Everything's in accumulation or reaccumulation. Price went through a stage 1. Price is now moving higher and potentially starting a stage 2, or is ready to make a new stage 2. Price is now going sideways on a rising 10 on my validation time frame, so I can expect a stage 2. That's when I step down to my 5. Not before. I didn't look at the 5 anytime here. I didn't care. I was waiting for price to give me the indication that there was money behind this in a way that I was willing to now take risk on a lower time frame. Then I stepped down. Now what do I see? Prices institutionally are moving bullish. Institutionally, they just started moving bullish and have the reason to keep moving bullish. They went through this back and forth and recently have started breaking higher. That is an accumulation model. You can see that with the MentFX structure indicator that all of you have. Prices are above a 200, 50, 10. Everything is lining up. Prices have made its move higher and started going sideways, which is a stage 1, so I can expect a stage 2. Prices create an ICI. Okay, it doesn't show it here, but this should be an ICI. I'll fix this because equal highs are still an ICI like this. So I buy stopped it. Price tapped me in. Price took me out for an instant loss. Did I do something wrong? Did I break my rules? Did I get emotional about my trading that allowed me to take this loss? No, I took a solid trade within a solid environment that made the most sense for me at the time to put risk on. And now it's invalidated. Invalidation, free money space. Does this mean I have to take another entry? Should I scale in right now? Let me scale in. No. If I'm wrong, I was wrong quickly, and now I'll stay out of price forever. If I'm wrong short term, what can I do later? I can enter. This is the beauty of understanding trend. You wait until price indicates that it wants to go. There's nothing else for you to do. Okay? And then price takes off without me. I have no valid area to enter. It takes off. Some of you might have buy stopped this. That's fine if you did. For me, it was not clear. Prices now are moving way too high. This stage 1 into stage 2 is really extended on my entry time frame. So the odds of this setup working become less so. So I don't take it. I'm willing to miss this move now because the setup is not clear to me. Many people are not willing to miss the move because the setup is not clear. Many will double down on the setup, even if it's unclear to them, because they're really scared of missing the move. I wasn't. I know that price can now flush out and then give me a setup. And if it does, I'll take it. If it doesn't, I will let it go. It flushes out, and look what it does. It doesn't give me a setup. It takes off again, and the next ICI is here. It's too far above price for me. It's moved too heavily away from its moving averages. I don't want to enter it. Again, I am willing to forego the potential gain because I do not want to take unnatural or unneeded losses because these are not the type of trades that I've studied. So I wait. Price takes off further. This trade would have worked out for a lot of you. I don't care. This is not my kind of setup. So I wait. Price pulls back and flushes back out. Price begins to, again, catch itself on a lower 10, which can easily turn up, and the 50 started going sideways a bit. I'm ready to take another trade if I get an ICI. Can you enter this ICI high right here, this buy stop? Yes, you can. Does it fit my rules? No, I often like to see a little bit of a higher push and proof on price's end. A lot of you that took this trade is perfectly fine. Is it my trade? No. And you would have made money. Now price has gone sideways a bit on the 50, which is what I look for. It is an accumulation. It is moving higher. The 30-minute is just sailing and coming out of the higher rising 10 and 50. The 5-hour is an extremely clear beginning of a stage 2. So does it have the right to continue? Very much so. This looks exactly like this actually looks like a specific market we've traded recently. What does this market remind you of? But that market I'm talking about is on a daily. Yep. Gold. Gold has been actually did this exact same thing, but on a daily chart. I hope you're all seeing that markets don't do different things. There's just different contexts at different times. And that's all there is to the market. Can I show you? What does this look like? Sideways market, stage 1 starts, lower time frame stage 1, new stage 2 anticipation delivers. Do you see it, Rick? Spot the imposter, spot the imposter, spot the imposter. Okay. Sideways move, starts to stage 1, goes into starts to stage 2, starts to short-term stage 1, starts to stage 2. Long sideways move, starts to stage 2, goes to stage 1, starts hitting to stage 2. That's where I'm entering. I'm anticipating the continuation of a stage 2. That's it. So again, if any of you entered this long, even though I didn't enter it, could have been really, really good. Price then goes sideways again. I set up a buy stop. I get tapped in. I'm in. I move to break even as price breaks that high. I'm at break even now. That's it. The trade has paid for itself. If it makes me money now, good. If it doesn't, all good. Oh gosh. Okay. Now, as it started to move, I did the same thing. I started moving my stop with the lows of the up candles. Okay? With the lows of the up candles, the lows of the up candles. Then I got stopped out of my first trade right here at 1 to 10. I took my plus 5R partial. Then what do I do next, guys? I almost always trail with the second MB. Price continues going. I trail to the low. Price continues going. I trail to the low. Then I entered another trade right here. And look what it did. It spent the whole time in drawdown and then lost. Oh my God. And then it took me out. Now let me ask you a question just by looking at these 3 trades. Did taking the losses make me money or did they lose me money? Good. And that's my psychology. I know the next trade is going to be a loss, a break even, or a win. But I also know that if I repeat those things, what's going to happen? I'm going to make money. It is a pleasure doing business with the market. That's it. How about the entry at 6 a.m.-ish? 6 a.m. So here, probably wasn't on, but 30-minute is not even on the 10, so it's very extended from its previous stage 1, stage 2. Yep, so I entered because of this stage 1. Just got to the 10, and then I was looking for this. This one is way too late, I think. If anybody entered this right here, I think that's way too late. But that's preference, right? Because if you have a system that relies on that, then that's fine. For me, it's not a clear move. This was my move, and then I got stopped out of my second partial at the same 1 to 10 because it kept going, made a beautiful reaccumulation for the low, and then boom, I just moved to the low of the reaccumulation and got taken out. Now, why did I not use the recent 2 MBs, right? The recent 2 MBs would have been like this low. Can anyone guess why I used this one instead of this one? RR is technically the example, but the real reason is because of opportunity cost. The cost of leaving it here versus here makes no sense. And this is where it gets a little bit crazier, and it's something that you'll focus on as you get better and better. The MAs are their own indication of what money wants to do. So when price was up here, above a 10 and 50, the reality is it shouldn't really get below them if the move is going to be continuing on its stage 2 now. So because I understand that, I know that a loss of the 50 and then a move all the way back down to this low will likely start a new what? Down move or a new stage 1. So I move my stop here because at that point, it's likely to fuck off. And it fucks off. Because again, I am studying the price. I'm getting used to how price moves. When I don't see price doing what I want it to do, I try to tighten up the risk that I have lying on the trade especially if the opportunity cost of leaving it here versus here is drastically different, which it is. If I left it here, the gain would be 1.5 RR or 2 RR. The gain here becomes 5. So I'm gaining 3 RR by moving it here with the possibility of getting stopped out and then it moving without me. But I'm willing to do that because of a few principles of what's happening. Where is the move on a higher time frame? What is it doing on the entry time frame in regards to the MAs, right? What is the actual price action of the reaccumulation, right? It's going up, down, up. Now, if it breaks down, we know that enters what? Distribution territory. So because I know the model will switch to distribution, I don't want to be in that trade, okay, if it switches to distribution, for the most part. It's not clear. So I move it, and I get rewarded for moving it. Now, would I be upset if I had left, based on my rules, my stop here, and then got stopped out here, and then got stopped out? Not at all. I would not be. Right? Because it's still making money. It's still using your rules. Whether I used my rule of trailing here or trailing here, I've still done it right. So at the end of the day, it doesn't matter that I could have made more. You guys know how most people blow up? They blow up on the principles of what could have been. And the more that you worry about what could have been, the higher likelihood of you consistently blowing up becomes. So we no longer should, why do I have this bottle? I don't know. But we no longer have to worry or think about what could have been because we know that the things that we're doing and following the loss break even win rule, we're going to make money. And that's how I got paid on coffee here. Now, as an outlook now into the coming week, do you think I'm still, here's the validation time frame, bullish on coffee? Or am I now bearish on it? Of course I'm bullish. I'm still bullish. Does my bullishness at the moment on coffee is it currently represented by the price action? It's not. So this is again one of those moments where there's no red invalidation or gain at the moment. It needs time, and as it starts moving higher, if it does, it'll create a moment like this one, where the downside is very minute, the upside is infinite, and then I can enter a trade and be rewarded in the scenario that I'm right, or be very quickly taking a loss or no trades at all if I'm wrong. And again, I've created a circumstance where I guarantee that over time, if I take losses, break-evens, and wins, that I'm going to make money. And that is how you're seeing time after time, month after month, week after week, member after member, consistently getting funded, getting better in their understanding, and consistently pumping out beautiful trades that are not my trades. They're pumping out beautiful trades on their own. That's how it happens. They're doing a version of exactly this, but for themselves. And that's what you're learning to do here. And that's why you're hopefully going to stay on the team forever, because you like the fact that you have such amazing shit here. Now let's do a trade breakdown of something that was on the screener. Because again, this was not on the screener. This is something that somebody brought up. I looked at it. I studied it. I said, this is good. I'll trade it. And now it's on my list. Let's look at something that's on the screener at the moment. Silver is an example of something I traded this week. Actually, oil, because a lot of you have been watching oil. Oil is something I traded this week that's on the screener. Okay, this is actually not a great example because it had a lot more sideways, so it's a harder one to talk about. But it was very, very clean. But then it broke even anyway. We want to break down oil? Okay, sure, we'll do oil. It doesn't matter. Whatever. Sure, let's do oil. So, well, you should all see on the 5 hour why I traded this. Like, not even talking. Like, you guys should all see before I even talk about it why I was looking at this on a 5 hour, as in my context time frame. Does everyone see the reasons? Literally all the same reasons, but institutionally bullish. MA's caught up, prices on the MAs and wants to go long. 200, 50, 10. Potential for stage 2 is very much there. Let's watch for it. And that's where I entered. Like, literally, you can see it. With the breakdown I just did before, you should all look at this and go, oh, makes sense. Next. But nonetheless, okay, nonetheless, a lot of you know that we've been following oil for quite a while. I wonder why. Interesting. I wonder what special fairy gave us the information that let us look at this beautiful, beautiful little market. It was Peace Pod. Exactly. No, it was a screener, okay? So oil is very, very bullish and has been showcasing bullishness. We can start on a higher time frame if we want, but overall it's perfection. Does this move here remind you of any other moves that we've studied today? It kind of looks like gold on the daily. It kind of looks like coffee on the 30-minute. Or the 5-hour, sorry. Nonetheless. Okay. We have a market. It came from institutionally very bullish background. It went through long-term distribution / accumulation. If you guys remember, the last time we traded oil was right here. We started following it. We continued following it, and then it failed. So we stopped following it around here. And since then, there's been nothing to do. And since then, it began to do this sideways and was going sideways for a while, and then it began to move long. And around these moments here, we transitioned our minds to start following longs again. The screener did the work initially, then we did the work of saying let's stay out, and then we started following it again around here. Oil now became clear, and now the expectation is what? Oil wants to go. Where is oil going to be in the next few months? Hopefully around here. There's nothing stopping it. So the free money space above is clear. It definitely wants to make some kind of move. Institutionally, it's moving long now. It's starting up a pretty nice institutional move. Institutionally, on a lower time frame, it's making that move. It has reason to keep going or come down a little bit further and then go. So everything is showcasing a willingness to go bullish. Let's go to my 5-hour. This is my context time frame. Prices are institutionally very bullish. Reaccumulation's on the way up. A little bit ugly. If you guys remember, I didn't trade during these times. They were ugly. Then here it started to shape up. Reaccumulation, and then around here we began to go, okay, this is clear. And then a very beautiful move higher. Now it's in reaccumulation. Given the fact that it's now clear, moving well, is in accumulation, is above a 250-10, can I expect it to now expand higher? Especially with the fact that we just went through a stage 1. 100%. I'm willing to trade this thing. Let me go to my validation time frame. So this is where it gets a little bit picky. You have to be a little bit careful because, again, not all price is going to be the same and beautiful. What is this concept as explained in section 3? That all price, even though it's relatively similar, will have a little bit of different delivery to it. Snowflake. This is the snowflake rule. Exactly. The OGs know. Nonetheless, institutionally, is this clearly bullish? Is number one. I would say yes. Whether, if you look at the large, I would say yes. So it has the ability to run higher. And it's in a deeper flush out now. That's fine. The deeper flush out it's in right now is its first reaccumulation. It broke down. It's in reaccumulation. Now, it was a little bit choppy during the week. Okay? That's important to recall and remember because, again, it could become somewhat weird. Now, I would not have followed it here anyway because it was not clear during the time and it was very wicky. So I waited. It broke down, wiki, started taking off. Really weird all over. If you did watch this, this might have been the first area where you could have traded it. And that's fine. If you did trade it, then there might be something there, but maybe there's not, so you just don't touch it. All good. Then it flushes out again. Now, the 200 starts getting a little bit choppy, but then right around here, which is when I started watching it, the 50 starts sloping up, the 10's already sloping up, and price is actually touching it. The 200 just started going and sloping up. So at the moment, you actually have a little bit of a decent moment for context to be met. So this was the only time I considered it, funny enough, because it started to line up with the things I want to see. And in the scenario that I'm wrong and price does this, what kind of context will this now enter? Very, very choppy. At which point I might actually ignore this long term until it starts coming up much more drastically, and then I might start watching it around here. Does everyone understand how I'm thinking about this market in the live time of it delivering? About how, again, I have suppositions around what price should do and what I can get involved in, and if it doesn't do it, how long it will now take me to actually start being involved again and where that would happen. Okay, so it becomes clear to me to trade it. Now, also, the reason that this becomes clear is not just because of this 30-minute, because I would argue with a lot of you and agree that this 30-minute price is what? It's actually pretty not clear. But what is the context of the 5-hour right now? Take a look at this. It has just found itself on the rising 50 over the rising 250-10. Just found itself here going sideways for the first time in a clear reaccumulation. So the only bad thing about this is the move of what? Of the pullback / choppiness in the sideways stage 1 to start a potential stage 2. So I'm willing to take on 1RR, maybe 2RR max of risk to try and get this right because of the move that it's proving itself to happen here. And the 30-minute now is setting up, in my opinion, beautifully. It just started surfing the 10. It's on the 10, so it has the possibility to move long. So I was like, so all I'm asking myself now is, what is my 5-minute telling me? My entry time frame. Is it clear or is it extremely unclear? That's where the next step goes. And this is what broke the business for me. This is what told me it's time to look at it. Because remember, it could still be ugly and then I just wouldn't touch it. Okay? Now, as I go to the 5-minute, it's been sideways for a while. That's important to remember because, again, this is a choppy market. It's kind of sideways since here. If you kind of draw a line through the middle, it's very choppy. And the way it delivered, if you notice, has been very choppy too, right? Big down move, huge craziness, all big up move, and then whatever this was. And again, what did I say? This might have been one moment to consider a long. Maybe one time. I did not consider any longs here. The price was too loose, okay? Then price broke down, so it's in distribution. But then started going through again the sideways and broke higher. Accumulation. And then consecutively, the accumulation was met with a breakdown that was very clean, 200, 50, 10, and went higher and moved higher and is now making protected lows that are going higher and higher and higher with, look at the MAs. I again pose the question to you. Are these MAs being bought up or are they randomized in terms of how price is delivering? So now it's coming up the right-hand side with rising MAs, with bullish delivery of the models, with clear institutional willingness to go, look at this, to go long. So all of a sudden that 30-minute weirdness partnered with the 5-hour clarity, partnered with the 5-minute or entry time frame models and clarity leads me to do what? Does it lead me more towards I'm willing to take a risk on this, or am I just going to take loss or not take anything? Of course I'm willing to take a risk on this. This is so clean. So what I'm waiting for now is, again, an ICI that I'm willing to buy stop. Have you ever seen anything more beautiful? Okay? Clarity in price, clarity in delivery. Price pulls back to the rising 50. 50 just comes down, so it's clear reaccumulation. It's being bought up. Every 200's down here. It's moving upwards. The protected lows are moving higher. It's in accumulation. It's in reaccumulation. It wants to move long. The 30-minute is somewhat clear because it's surfing a 10. The 5-hour is extremely clear because it's just found itself in a reaccumulation. The daily looks like gold on the daily. It looks like fucking, what's the other one? It looks like coffee on the fucking 5-hour. It's so clean. I'm in. Oh, almost get stopped out. I move to break even. It's over. It's over. The game has been played. It made an insane move out of nowhere. I took 2 partials on the way up, and I left the stop loss at break even. Now again, how did I partial? I partialed into strength and weakness. So my first partial was taken here, I believe. So I just used the lows of the candles, and then I took it out here at 4.5 to make 2.2. Then the next one, because of this insane move, but no MBs, I believe that moved my stop to this low or this low. I'm not sure. I forget how I managed this. So the next one was, yeah, so right here. This low, as it began to move higher, I moved it here, took it out at 10 RR, which is 2.75, just a little bit higher. And then the rest, I left at this stop loss because I was waiting for a double MB. I was waiting for, because look at this. The 50 is still here. So I expect price to maybe reaccumulate and then do this, right? And then I can move my stop. Instead, oh no, it's over. Oh! This is fine. Prices will do this, okay? And then I got taken out of the rest of my position. I got no move, but that's okay. That's part of the game. And then the rest of the week, well, this was literally on Friday, I believe. Yeah, just nothing to do. Look at the moment within which I made my money. Really think about this, right? It was one moment that presented itself and I just took it. Sujan says, would you consider to take the previous ICI? Which one? There wasn't one. There was like this one right here. So this was either break even for, I mean, this was for sure break even or partial plus break even, but probably not. Probably not. Plus, what time was this? 6 a.m.? Oh, that's usually when I'm up. I'm usually up just before 6 a.m., so maybe. It's personal preference, but it's fine. It could be okay, yeah. I don't see anything wrong with it. Yeah, I mean, it's fine. I like it. There's nothing wrong. If you took this, I don't see anything wrong with it. It could have easily delivered this move right here, but it just didn't. Do you even sleep? Sometimes. I take naps sometimes throughout the day. It just depends. My schedule usually gets pretty screwed up, but that's okay. So then this brings me to the next week now. Is it in a moment right now where I should be touching it, trading it, looking at it in any way, shape, or form on my time frame of entry? Not at all. There's nothing for me to do now. Absolutely nothing. Let's look at the 5 hour. Is the 5 hour in a good context to be traded? Beautiful. I'm so happy you guys are saying yes. You guys are right. It's actually in a perfect clarity right now to be traded. But notice how even though the 5 hour is super clearly tradable, our time frame usage of context models is telling us not to look at it right now. That's it. So I know there's nothing to do right now until prices begin to push, and then around here I might follow it to go long. Until then, there's nothing for me to touch. Until then, this is likely to do what? Sideways, down move, nothing to do. If it wants to go long, what is it going to do? It's going to tell me because it's all within the price. The screener's telling me it's bullish. If it wants to be bullish, it will show me that. Otherwise, I will not be touching this whatsoever. I'm just going to follow the simple rules for what this price wants to do. Can it do this move? Yes, I expect this move. Remember, I expect this. It's likely. This move is super likely. But there's nothing for me to do right now. So I will wait on the sideline. Sujan says, did you consider that big range? Sujan, you're going to have to rewatch this webinar after it's done because I just went over the exact rules behind that range and why, again, through the snowflake rule, I was willing to trade it. So watch this webinar after. Also, see you, TB. Thank you for being here, bro. Yep, exactly, right? This is the only other time I told you I might consider it, but remember, at that time, the 5 minute was not clean, right? This is where that happened. It started to move. Like maybe you have the option for this, but notice the move before. Look at this. Where are you going to put your stop? Here? Here? It becomes unclear. So the move prevented itself on the 5 minute because remember, your system is not a enter because the 5 hour is clear. Your system is not enter because the 30 minute is clear. Your system is not enter because the entry time frame is clear. Your system is, I know moments where I'm going to get involved. And then once those moments are met, I'm going to double check them and verify them through my other timeframes. And when everything is in alignment in regards to what I want to see, in regards to what I want to see for delivery, I'm going to enter the trade with the supposition that I'm going to make a loss, a break even, or a win. And I'm going to do that over and over and over again until my equity curve skyrockets. And you're done, right? That's my entire rule set. Let me see if somebody wrote something that I can respond to. Comments super clear. I think I got this one. Mukhanad says, good evening. No. Don't do it to me. Oh my God, my other computer almost died again, bro. It almost died again. No way. That's okay. So. Oh, he says, good evening. I rejoined the mentorship and I'm about to finish watching the remastered course. Good. And I understood about 70% of it and will rewatch the course 2 times more. That's not the course, remember. The course is the webinars. Everything else is small building blocks for what I actually do. These webinars, the thing you're watching right now, is what contains close to all of the things that are tangible things that you can do right now to change in your system, to improve your system forever and ever and ever, right? And like, if you enjoyed this webinar or if you learned something from it, recognize that a lot of my webinars are very similar, where you're going to see me actually doing the things that I preach and teach, so you know how to do it yourself and see it live within the things that I personally traded and what people have traded, okay? Is there any video that explained the interaction between the price and the MAs? Yeah, it happened today. It happened in previous webinars, in the last like 3 or 4 webinars, since 100 onwards webinars. Yeah, for sure. And the general interaction is the same thing you see every single time. The MAs are oftentimes areas at which on higher timeframes or your context timeframe or validation timeframe, price will be bought up, which will start new stage 2s. That's really all it comes down to. And then on the entry timeframe, they are measures of whether price is extended from an area that makes sense to be bought at or not. They are examples of where price will be redemanded, right? For the same reasons that the higher timeframes are used the way they're used. So yeah, there's tons of it. Even like this one right now, right? I hope you see how just showing up to this one today should have given you more understanding about MAs and how I use them, examples of how I use them, and how you can start using them. Everything is always a build upon. It's a block. You add a block every single time. You show up to a webinar, you add a block. You might not even notice it, or subconsciously, these blocks are being added over and over and over again. I can guarantee you. Dante says the screener is a cheat code, saving you plenty of time from checking multiple timeframes, multiple pairs, filters out the criteria for you. Great work. Thank you, man. I appreciate that. And it's only getting better. Just you wait. Just you wait. We got so much cool stuff in plan right now. Here we see it. Anton can see in the future with his 5-hour time frame. Yup. The special time frame, bro. The special time frame. Reading valid context. MAs do not necessarily need to interact with the price to have a good potential entry. MAs are playing a part from the standpoint of the fact that they're interacting with the price. How have the MAs moved and what are they showing me? Yep, exactly. Like when MAs move like this, they're showing you what's happening in regards to how money is entering this market, how stage 2s are occurring, and what's likely going to happen next. So when this happens and you have new accumulation happening, you can expect the next move to start again. That's where that comes from. But yes, exactly. And there's so much content on it, right? The only goal right now for you is to work through it. I can't point you to exact videos because there's no such thing as the one video that discusses MAs and that's all you need. Because it's an ongoing progression that has a lot of moving parts. So there's one-on-ones, for instance, right? Within the hashtag context clues or within the hashtag ICI extras in the mentorship that are going to be standalone videos that will change forever your opinion or your view of using an MA or how to use an MA. But they are all building blocks and they're always going to be, okay? So guys, for the upcoming weeks, the things you see in blue continue to be the things I'm watching, okay? That's really all it comes down to. GBTC or Bitcoin is something that's still on my list. It's still very clear. It has the ability to start rising into a stage 2. I'm going to continue to watch Bitcoin for a long. Euro JPY. Everything is still kind of in line. So a lot of the XXX-JPY pairs that are still bullish, that are moving bullish, are setting up. They're just not ready yet, right? They're in big flush outs. So until they start to, again, accumulate and build up and get above the MAs and start riding higher, I will not be watching them. So right now it's not clear, but it's still bullish. Gold, very clear, very bullish. Same goes for silver. These, you know, they're having some flush outs now, so they need to, on their validation timeframes, based on if you're trading a 5-minute, for instance, they still need to get their way back up. But once they do, I will be following this again. Silver, same thing, right? Nothing to do now, but as it moves its way higher, I will, of course, be watching it. Soybeans, whatever, fuck soybeans. Oil, same thing goes. Right now, there's nothing to do. We spoke about this, so you guys know what to wait for. Coffee, same thing. So you guys can see a lot of these markets move the same way. A lot of them are in flush outs or in unclear actions right now. But if they can start shaping up again the same way that they did here, I will be watching for entries on these. It looks like we might have to wait a few days before the trades are good. Tate says, what about the halving of Bitcoin? Stop reading the news. Start working through the course. If you have to ask me about news, you already know, or at least I know, that you have not been working through the course. You should not be trading at all. You should not be thinking about trading. You should be working through the entire course. News are a distraction. They're going to make you lose your money. They do nothing for you. And the fact that you're thinking about, what do I do? Bitcoin is going to half, tells me you're nowhere near the point where you should be trading right now, okay? US 100, do you still follow it? Right now, I'm pretty sure it's been sideways for a while. So, yep. This is a market that you do not trade. This is literally, like I said last week, asking to lose money. There's nothing to touch here. This needs to shape up in crazy way. Look at the range it's in. Look at the prior action. Is anything showing you that money's being bought up in a clear way, going in a clear direction, moving anywhere even? No. The 200's sloppy all over. The 30 is as well. The 10 doesn't know what to do. The range is huge. It's in a distribution while the higher timeframes are in accumulation. The higher timeframes are in accumulation while moving super sloppily. There's nothing to do. This thing needs to move up to 18,500 before I even consider looking at it on a lower time frame. Until then, there's nothing on this at all. DAX, someone just asked about DAX, that's DE40. Yep, it's doing exactly what we wanted to see. We spoke about how you should have traded here if you were. Now you're getting the pullback or the reaccumulation. This is perfection. If this can start to shape up, there's going to be beautiful trades on this. At the moment though, let's take a look at the 30-minute. You're in long-term, very long-term reaccumulation. So what this needs to do is it needs to do a blueprint. It needs to take time, break up, maybe break down, break up, right? Start making a bullish move, reaccumulate, and around here, you'll be able to trade this if it makes that move. At the moment though, it's not clear at all. It needs time to accumulate this position and then there will be a trade on this. So like a lot of the other pairs I'm looking at, this needs real time. Euro USD, very likely going to be the same as every week so far. A lot of shorting looks like it's coming in on this thing. Let's start with a 5-hour, just to take a look at where it is. Okay, so it actually did make its way down here. Good. This is what we were waiting for. We were talking about how it's actually starting to go bearish. The bearishness started, redistribution, starting bearish. Right now, very extended. Can it continue? Yes, but we should look at our validation time frame now. Validation time frame actually has a reason to go. Not bad. It's in redistribution. It's just sailing the 10. It's 250-10. Looks really good, actually. Not bad. I may actually have to add this to my list. However, the one thing I don't like is the fact that the 5 hours all the way down here. The likelihood of a continuation right now are quite low. I would wait for a stage 1 or at least a little bit of this 10 to catch up. So again, same thing as last week. Wait for this to catch up like this. Let it go like this and then start watching it here. That would be the most optimal way to do this. Right now, I don't like it. And the way it's moved lower has been actually pretty shit. With the most recent example, with the most recent being kind of clean. So yes, let this come down, let this reset, and then here, you'll likely have an entry. But until that, there's nothing to touch on this. I would not be touching Euro. But yes, you're correct. It is starting to enter a decent context for shorts. Finally. It's been how long? It's been months, right? It's been like 7 months, 8 months. So we're finally getting there. And if we now take a look, even at our sentiment, we're finally getting there. it's entered bearishness, right? And then if we look at the MyFX book, Outlook, Community Outlook, what? MyFX book, Community Outlook, right? I bet you, I bet you we're starting to see people funnel into the wrong side, which means a trend is becoming very highly likely. Do you guys remember 2 weeks ago when this was 50-50? Oh my golly, bro. These markets are so much fun. All right, yeah. So yeah, Euro USD, it's starting to get there. It needs to stage 1. So remember, people that are bullish on this can still be right. This can go up for a little bit. It can even come up all the way here and then go short. Give it time to prove itself. It needs time to go into a new stage 1 here. Even short term, it needs a stage 1. It needs to reset, it needs to correct a little bit, and then it'll be ready for a beautiful, beautiful move. So wait for it. Yeah, so silver we spoke about. So all of these things are kind of on the sidelines because they're not super, super clear right now. But as they start setting up, we're going to be in a really, really, in a really clear move on a lot of these. So I'm just waiting for that, right? If this continued, that'd be great. But right now, yeah, it's resetting. Coffee is honestly looking really good. So if this can go sideways and then start a move, that'd be really great. Oil, kind of same thing, but a little bit worse. USD CAD. Still bullish, right? Yeah, so it finally made its way away from this. So again, this is an example where you should have been trading it here. If you didn't trade it here, you're really late to the party again, right? Really clear moves, yeah. So this is perfection. If you traded it this week here, perfect. Now you have to wait for a reset and then a new move. But yep, this looks good. There's nothing wrong with this. It needs a little bit of time now. It's like Euro US dollar, but flipped, right? Here you go. That's EU. That's USD CAD. Got it? Wait for sideways, then continue the move. If you got in during this moment here, very good. You did it right. Take a look at this. You have beautiful, 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 beautiful non-stop opportunity, right? Remember, throw a dart and you get rewarded just based on the fact that you understand that price has gone sideways, wants to start a move, and it's in that move. So yeah, this needs time now, but if this can come down, right? So it's probably, if it gives you a setup, you're likely looking at, well, probably somewhere there. So you're probably looking at come down, maybe break up a little bit, come down, and then you'll start something like this, okay? And then you'll get a trade like around here, literally. So yeah, USD CAD, you know, it's setting up, but it needs a tiny bit of time, in my opinion. NASDAQ, we already looked at it. That's US 100, extremely ugly. If you're trading that, if any part of you looks at NASDAQ right now and says, this is not too bad, you will lose money long term. Unless you're like very higher time frame oriented. Let's see if you're higher time frame. So if you're trading a daily chart, you're probably looking at a weekly as your context. Let's take a look at what we have. So yep, so you could be in stage 1 on the weekly. That's fine, right? You could be starting that. Let's look at a monthly really quick. Monthly is a bit extended, might need a little bit more time to go sideways, right? Started stage 2 here. Now it's probably in slow term stage 1, but it can still go, which means if you're trading a daily, yep, so daily, if it can reset a little bit more, because I usually like a reset, so like reset, there should be a trade around here. Otherwise, like I said, for the next few weeks, next 1 or 2 weeks, 3 weeks, there's going to be nothing on this. I would ignore NAS until this happens, and then you can maybe start looking. GBP NZD. It's not even on here. I'm guessing because it's a bad pair, but let's look. Yeah, the bullishness is there. Reaccumulation, moving bullish. Actually, really good. No, this actually looks really clear. A little bit choppy in delivery, but in clear reaccumulation, moving clearly bullish, moving clearly within institutionally bullish. Just found itself on the rising 200, which is great to see. It's not going 250-10 yet, but it is starting to slope up here. So if the 30-minute is clear, then there's a good trade here. So the 30 minutes not clear yet, but it's in a blueprint. So, yep. So if GBP NZD enters blueprint accumulation, starts moving long, goes through reaccumulation, you're going to get a very nice trade around here, right? And then you're good. Until then, I wouldn't touch this. This needs time again. Bitcoin USD, we've already spoken about it. It's good for bullishness, but it's terrible right now. A lot of sideways action, a lot of breakdowns, right? Failure to run accumulation and new breakdowns. This is now entering distribution. This needs to either find itself or it's not to touch. Simple as that. This is, again, back to the same example we had today with invalidation and free money space. There's nothing here to trade at the moment, so I would not touch it. Yep, this needs, it can start right now, right? It can be bought up here. It can definitely get bought up, but needs time, as you can see. It would take time for it to be bought up here. USD CHF. Yeah, it could be an accumulation. This is indefinite accumulation. Yeah, it looks pretty good. I think I pass on this over and over again because it's pretty choppy when it delivers on a lower time frame though. 30-minute, very choppy, enters accumulation. Yeah, I mean, this thing just likes to go up, down, even if it goes higher. So I would ignore it. I don't like the action on it. Yeah, you can even kind of see it. Yeah, I would ignore USD CHF. I don't like it. It is bullish though. So if you're trading it, you can be trading it. I would just not trade it because it continues to make the same choppy moves. mRNA. Again, I don't know what timeframes we're trading, so I'm just going to predict random ones since that's what I have to do when I don't get timeframes. But weekly, clearly institutionally long. The 200 just started existing because it's just spent enough on a 200 weekly, it seems like. It's under all of these, so this is like a bearish move right now within distribution. So right now it's bearish on the weekly. The daily is in reaccumulation, but it's all the way down here. So a very weird reaccumulation. So blueprint, but nothing to trade. The 5 hour, if we're looking at that, relatively choppy in terms of delivery. Starting its accumulation, pretty choppy on the accumulation as well. Yeah, so everything's against itself, right? The weekly wants to go down, the daily wants to go sideways or down or up. The 5 hour wants to go up, maybe. The 30-minute wants to go sideways, so there's nothing to touch here for me. Can you look at KLG 1 hour, 4 hour, 15 minutes? Sure. 1 hour. Again, I'm going to start a little bit higher because I use kind of like all time frames, but very bullish, very clear, kind of late term stage 2, but that's a higher time frame. That's okay. 250.10, that looks really good. The hourly is in clear accumulation, very nice blueprint, starts a move, reaccumulation, starts a move. Right now in reaccumulation has, yeah, it's actually pretty nice. It has the ability to get bought up now and keep going higher. So we'll check the, oh, you said 4 hour, 1 hour, 15 minutes. So we'll look at the 4 hour as well. Yeah, it's okay. It can start a move on the 4 hour. It might need a little bit of time on the 4 hour, but that's okay. 15 minute as entry time frame, you have an overall accumulation, moving relatively clear accumulation. Had a really good setup here. One thing I would ask is why are you not in this trade or in this trade? Those were very, very clear. However, that's okay. Right now, nothing to do, right? Of course, but you're waiting for something like this, and then good trade right around here. Yep, you can definitely get this out of this. This looks fine. Good idea. GBP USD shorts, probably. I mean, if Euro USD is short, GBP USD is probably short. Likely. Yeah, it looks the same. Probably needs time. Yep, it's the same market. Institutionally long, or I mean short, but institutionally is there. Starting this blueprint, starting moving higher. This was phenomenal. If you followed that, if you didn't, you're a little bit late. You might have to wait a little bit now. 30-minute. Yeah, honestly, it looks good. You could trade this thing. Right? If this starts setting up, there's no reason you can't be a trader on it. Let's see what this looks like. Yeah, this looks pretty clear. Nothing wrong with it. So wait till a decent session where money's actually entering this, so likely London or New York, and you're probably looking at a trade on this that then delivers. Yeah, GU's clearer than, here you go. GU's clearer than Euro USD for sure. It looks like it can make a move. I'm not against it. It might need a little flush out or a deeper flush out before going. Anton, USD THB. I know it's an exotic pair, but just an example of looking good, kind of daily looks good. Accumulation, definitely an accumulation. Daily is a little bit loose, but it is on the 10. Rising 10. 5 hour is in somewhat of an accumulation. Actually, it is an accumulation, but it moves higher very choppily. A lot of wicks as it moves. And right now, most recently, it's still wicking crazily, so I would ignore it. That's really it. Ernu, 4 hour, 1 day. Is that LSE or MIL? Which one? Why are you looking at the Mexican exchange? E-liquid, hard to trade. Unless you're on a very high time frame. So I'm going to assume you're looking at this on a daily time frame. Otherwise, you should not be touching it. Monthly context is in accumulation and starting a potential stage 2. Weekly went through very nice blueprint into reaccumulation. So this does have the ability to move higher. So if you're entering this thing on a daily, you had, again, a trade here, but notice where it opened. So you would have missed this trade because you don't want to be entering here. And yeah, this is the only other trade. So if you entered it here, that's the trade you should be in. And now you're waiting to break even. Yep, this should be your trade though. If this was not your trade, then you should not be in this, right? Other than that, it looks pretty good. It's not bad. It can definitely follow through, right? Boom, move to break even on Monday or Tuesday. If it starts going sideways like this for a while, I would just take it out at break even if it comes back up. And then you're good. Yeah, this looks like a fine trade. But again, notice how it delivers. Be very careful with this kind of thing. But it is clean in terms of its MA moves and the models. So if you're trading this on a daily or higher, it looks good for bullishness. I'm not against it. Actually, not a bad eye. Good job. GBP, GPY, just like I said, all XXX JPY pairs retain and continue their bullishness. So nothing to do but keep following the bullishness if it sets up. They continue to not perform like in crazy good ways though. A lot of sideways recently, still sideways, and right now below the 50 and 10. So not much to touch until it starts moving higher. Nvidia. Yeah, you had endless opportunities all the way up. Now you're in another stage 1. In reaccumulation, definitely can start to move. No reason it can't. Again, I don't know the time frames we're trading this on, so I'm just assuming. I'll just assume we're on 1 month, 1 week, and 1 day. Yep, so monthly had the move that it had on gold, right? It needs time now. Needs to go sideways for a few months. Nothing really to touch. Let's look at a weekly. Weekly is just starting to pull back, so yeah, I mean, if the daily wants to set up, there could be a trade on this for sure. So I would give this some time to either come up and go sideways and then take a trade here, or come down, come up, and then take a trade here. I would not buy stop this. I would wait. This wants to come down a little bit and then go. So this needs a little bit of time. Okay. Oh, 1 hour. Accumulation, reaccumulation, started the move, failed to make the move, came down here, re-entered new accumulation, basically with this break, and right now chopping around. So again, on the hourly, even if it wants to make a setup, it needs time, which makes sense with the higher time frame, or it needs to like break up, break down for reaccumulation, and then give you a setup here. So until that, there's really not much to touch. Okay, guys, I think that's a good amount of outlooks right now. This generally covers like almost the entire market. So, because again, remember, a lot of things are correlated, even if they're not the exact same name. Okay. So that leads us to an end. I hope today was very insightful for a lot of you. You know, there was a big focus on a lot of conceptual and technicals. So use them, get better with them, continue to get better. Use the things taught today to get better at the things that you don't understand right now. Yeah, I will be watching a number of these markets, you know, probably later into the week, because right now, honestly, there's not much clarity. So outside of the occasional stock that shows up on my screener, there's not much for me to do right now, okay? I hope the breakdowns were helpful to you guys, very insightful. I hope you guys continue to improve. I respect all of you for being here today, for sitting inside of this webinar, for the 2 hours that we had it for. It's a ton of respect for all of you that show up and make these webinars what they are and ask your questions and offer your insight. But much love to all of you. Good luck in the coming weeks, whether you're funded, getting funded, or learning, because all three of those things are amazing places to be in your journey. I look forward to seeing you all in the trade talks. Continue to help our newcomers, point them in the right direction, be nice, be kind, and have yourselves a beautiful, beautiful Sunday. Goodbye, everyone. A ton of respect, a ton of love. Goodbye.